Hello there, this is James, and you're watching Tixee Live. In today's program, you probably can guess what we are going to talk about. It's about a certain event which is happening later tonight. So we're going to have a good old conversation about that and discuss how the market is feeling about this event. I'll also do a recap of an update, shall I say, of what happened previously this morning, what I discussed this morning in relation to the ECB and a couple of other things. But before we get into that, don't forget, these little episodes are for educational purposes only, and in no way whatsoever should ever be treated as financial advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So yes, you all know I'm going to be talking about a certain event which is happening tonight, and that is indeed the Fed's interest rate decision, because this potentially could be a huge market mover, and we'll talk about it in a bit more detail. But yeah, their interest rate decision is happening around about 6 p.m. UTC. Okay, UTC, this is tonight. So it's going to be very fascinating to see what they finally decide, because over the last couple of days, since Monday, the market initially assumed, going on their words, which they said some time ago, that the Fed was only going to increase interest rates by 0.50 basic points. But now the market is asking, could we potentially see a 0.75 basic point increase, or even 100 basic point increase? So they're all going back onto this. But why the sudden change in attitude or sudden change in opinion? Why we were going from 0.50, but now 0.75 is potentially on the cards, and even 100 is on the cards. So what has changed? Well, the market started to delve back on a couple of things that Jerome Powell has said previously, like this. What we need to see, this is his quote from him, what we need to see is a clear and convincing evidence that inflation pressures are abating and inflation is coming down. Okay. He also added, if we do not see that, then we will have to consider moving more aggressively. So those of you who join me on Friday, you'll know where I'm going to go with this. Inflation. This is what it's talking about, getting inflation lower. US CPI inflation in March was 8.5. Okay. April, it was expected to be 8.3. And May, it was expected to be the same at 8.3. So many people sort of thought that inflation had peaked. But those of you who were with me on Friday, when we did my watch along, we know that it came out as a shocker. It came out at 8.6%, which is the highest level since 1981. Now, because of this, because of the previous comments Jerome Powell has said in the past, and because of the fact that inflation is at a 40-year high, a 4-decade high, the odds now of many analysts think that indeed 75 basic points is on the cards. Okay. In fact, there's a Fed tool, which is by the CME Group. They say 99.8% that the Fed, 99.8% of the chance of the Fed raising interest rates tonight by 0.75 basic points. Okay, 75 basic points. In fact, like I said yesterday, those who were kindly with me again, like I mentioned, the likes of Barclays have now said 75. JP Morgan, 75. Bloomberg is quoting 75, along with CNBC. Deutsche Bank, 75. So many people have changed their tune on the 50 basic point to 75. And if they were to do that, okay, and raise it by 0.75, it'd be the biggest interest rate hike done by the Fed since 1994. Okay, so yeah, we're looking at some real big potential changes in action today, which is going to be really, really fascinating to see what they do, if it is going to be 75. I mean, let's say even the talk of the 100 BPS, I mean, that's just And anyway, let's have a quick chat. Okay, because the question is always going to be asked, James, what will happen to the market if they were to do these things? And of course, obviously, nobody knows for certain what will happen in the market when these certain events happen, because hello, my friend. Good afternoon. What will happen to gold, you think, James? I will talk about that. It's a really good question. I'll definitely talk about that. What I think, and we'll go through these scenarios now, and then I will have a look at gold separately with these scenarios. Okay. So, so as I was saying, welcome back, by the way. Good to see you. So let's go for some potential scenarios. Okay. What could potentially happen. Nobody knows for certain, because otherwise we all have, crystal balls, and we don't. But let's go through some potential scenarios. Scenario number one, say they go with the consensus of how the market is feeling at the moment. And they do raise interest rates by 0.75 basis points. Okay. So the way I see it, there could be a couple of things could be taken from this. Okay. A couple of things. First of all, because we've been talking about it for the last couple of days, one scenario is you could see buy the rumors, sell the fact. That is, the dollar temporarily gives up some of its gains. Okay. Alternatively, because this is a bit of a shock to the system, you could see the dollar potentially gain more strength on the back of this, because then the market will start getting scared. The likes of the stock market and equities potentially could come under pressure, because again, the fear of this being too aggressive and the market not recovering, or market not being able to take it, and then the dreaded R word coming up. So that's what you could potentially see with scenario one, if they raise it by 0.75, potentially. Scenario two, they go to our original outcome, what we think, and they raise it by 50 basic points. What you could see, the dollar temporarily, only temporarily, give up some of its recent gains, but you could see a little bit of a boost in equities, indices, in the stock market. You could see a little bit of boost in that, because then the market may look at it and go, do you know what? But they're going to be light with this, so we can handle these little bite-sized increases. So perhaps we could do it. So that's what you could potentially see on that. On option number three, which is probably really unlikely, where they raise it by 100 basis points, the market has a knee-jerk reaction, which means you'll potentially see further dollar strength, dollar gains, see the equities and indices and the stock market come under pressure, because this is going to be too big a shock. Because the Fed could look at it and go, well, with inflation at 8.6, okay, we still have a reasonably buoyant labor market. Let's rip the plaster off now. Let's do it now before we've fallen into recession, and then our hands are literally capped. Let's do it quickly now to give us some time to try and get our inflation target down. Okay, buy us some time, and hopefully the economy won't slip straight away into recession. So it gives us time to do that. And if we see signs of that, then we can then maybe proactive and reduce it back. So that's what they could have with scenario with that. Now, to answer my friend's question, okay, if I can pull up my chart and let's have a quick look. Oh, we got lots to talk about. I got to talk about the euro in a minute as well, because the euro's had a fun day. But anyway, let's answer this question first, because it's a really good question. Let's have a look at gold, because gold, okay, this is gold on a 4 hour. Let's look at keep on the 4 hour, because there's key levels. Okay, if again, this is only potentially if the Fed increases it by 75 or 100. Okay, you could see dollars. You could potentially see dollar strength against the yellow metal. Okay, yellow strength against the yellow metal, which then means really we're looking at this potential area of interest, which is the 1,800 level. Okay, so that's where I'll be keeping my eye on that. So this is what we could potentially see. Okay, it's one scenario on it. If they, what you could also see, but I've been watching gold to be doing this for a while, but it's not doing it. Don't forget, gold is a safe haven. Gold is a safe haven. It's not really being as attractive as a safe haven like it usually is. If you do raise it by 75 and 100, the market could get spooked again, like I said, same with the indices and everything else. And you can see maybe then gold react as a safe haven. So maybe like we saw at the CPI the other day, we saw the dollar strength against it. And then a few minutes later, gold skyrocketed again. You remember in that episode, I also asked questions whether or not maybe gold's safe haven status was coming back. And it hasn't. But anyway, so yeah, if we see 175, we could potentially see gold come under come under pressure, I would be keeping a close eye on the 1,800 level. Okay. If they do it by 50, though, you could see the reverse. You can see gold pass some gains, and you can then potentially see there may be gold. First of all, obviously, we've got this level where it's at the moment, $1,830. But then again, of course, this area here, 1,864, could be, again, an area of interest. Okay. But those are potential scenarios for how gold may react. But like I say all the time, we never know for certain. It depends how the market feels at that moment in time. And don't forget, sometimes as well, we don't get the instant reaction. We get a little bit of time for the market to digest this. But that's onto that. But anyway, that's answering that. Great question again, as always, by the way. Really, really good question. So what else? So obviously, we got this huge event tonight. But what fun have we had today? Okay. Those of you who kindly joined me this morning, okay, you know that the ECB suddenly announced an emergency meeting. Okay, emergency meeting. And the market got quite excited by it. Or the Euro bulls got quite excited by it. Because they say, obviously, last week's press conference was so underwhelming and really disappointed the Euro bulls. They had suddenly thought, okay, this emergency meeting, especially with the bond prices, the Italian bond prices around about the 4% level, really high. So they thought, okay, excellent, we're going to get reaction. We're going to get a reaction to this. We're going to get something. And, on the day, the Fed's going to do something. The ECB is going to get up and possibly do something too. But no, basically, they were there for a good couple of hours. We'll look at the euro, see how the euro reacted with that. And basically, the recent statements they've come out, they basically said they instruct committees or the committee to prepare for new anti-crisis tool for approval. Okay, new anti-tool. Okay, so interesting question. I'll come back to that in a second. Instructs committee to prepare new anti-crisis tool for approval. So basically, this meeting, emergency meeting. This is the impression it gives me. Okay, impression it gives me. This emergency meeting was called so they can arrange another meeting in the future for them to do something. So they called an emergency meeting for the purpose of arranging another meeting. Okay, arranging another meeting, so maybe in that meeting they might do something more concrete. So yeah, that's why basically the market is really, really disappointed with this statement from the ECB. To answer this question from this young lady, nice to see you again. She says, "Do you think the ECB emergency meeting would affect what the Fed would announce?" My answer would be no. Especially if their announcement is the arranged another meeting. No, the Fed's going to be focused purely on their target of inflation, okay, and economic data as well. They're purely focused on the US, not focused on what Europe is doing at the moment. Actually, there was a brilliant quote in Bloomberg I was watching today, and this person said it's a bit like the scene in Top Gun, the original Top Gun, where basically the other central banks are caught in their jet wash by the Fed. So the Fed is leading the way. They're not taking lead of what the central banks are doing. So anyway, yeah, ECB disappoints again. Let's have a look at the journey of the euro, how the euro did. Okay, so remember this morning, okay, the euro was trading around this level of 1.0424. They got a bit of a boost on the back of this emergency meeting. As soon as this statement came out, when they found out it was a meeting about arranging a meeting for another meeting, so they might actually do something for another meeting, so to speak, it then came under pressure. And like I say, now it's currently trading at 1.0411. So a little bit under where it started this morning. So very, very disappointing. This while we're on it, let's have a look at how the sterling's doing. The sterling is holding its own at the moment, just above the 120.65 level. So it's holding its own there at the moment. But again, yeah, we are still going to have the greenback. Like I said this morning, I do think that the dollar bulls are really waiting now for this announcement. Other news. The news. Yep, we had US retail sales, okay, as well. That was announced today. And this could give the Fed a little bit of room for. This is the sort of thing the Fed would be more focused on this than what the ECB is doing. But yeah, this is something which came in. This retail sales was announced. It was expected to show an increase, a plus of 0.2%, but instead it came in as a negative 0.3%. So not good news. Now, don't forget, the modern day economy is based upon us spending money, and we need us to spend our money to inject life into the economy. So this is obviously negative news. But again, like I said, this has really been overshadowed by the US interest rate decision and the surprise ECB rating. So that's sort of gone under the radar, but that's going to be something to keep an eye on how that moves as well over the next couple of sessions. Other news, obviously, big one tonight, US interest rate decision, UK interest rate decision, which I will be doing a watch along, and of course, Bank of Japan interest rate decision on Friday. So don't forget, as I've just said, I will be doing a watch along for the UK interest rate decision tomorrow. That's at 11 a.m. UTC. Original expectations, or most expectations, was the Bank of England to do nothing. However, the market's now thinking that they may increase interest rates by 0.25. There's even calls for them to go to 50 basic points, but let's see. But I will be doing a watch along. As usual, I'll be going on 10 minutes before the announcement, so we can have a good old little chat about it, talk about it, what it is, explain what it is, and then we can talk about when the main thing comes out. But yeah, tonight, it's the big one. It is indeed the big one. European markets are still, tepid. The FTSE's up 1.38%, DAX 1.32%, and Euro Stoxx 50 currently 1.65%. But like I say, the market is a little sideways in general. So the currency market is, apart from the Euro's boost earlier on from the ECB press conference. But in general, we're all waiting now for that all-important Fed interest rate decision. And let's see what happens. Don't forget, you can always ask me questions whenever you wish. I've had 2 really good questions today, so always feel free to ask me questions. As always, that's what I'm here for. So 2 very, very good questions. Thank you for that. Tomorrow, like I say, I'll be back on again at 8 a.m. UTC to do my morning show. That would be interesting, because then we can see the aftermath. The aftermath was what has happened from tonight. So that's going to be brilliant. So remember that 8 a.m. UTC. Then of course, it will be 10:50 a.m. UTC, I believe. Yeah, UTC. I'll be going live again for the watch along for the Bank of England base rate decision. Big one. And then finally, I'll be doing my 1 p.m. session again for the afternoon session as well. So I'll be covering that as well. Hey, what's up, man? What's up to you too, my friend? I hope you're good. Hope you're having a really good day. Thank you for coming along. So don't forget, I'll be on 4 p.m. tomorrow as well. So that'd be awesome. So yeah, big events tomorrow, big things happening tomorrow. Should be really exciting tonight, but we've got more big things happening again tomorrow. And like I always say, don't forget, you can always ask me questions whenever you wish, or just say hello or what's up, like that. That cool gentleman just did. Thanks for that. It was nice. I liked it. If there was no further questions, okay, no problem. Don't forget, back on again tomorrow. And if you're watching me on Facebook and you quite like it and you've enjoyed it, give us a follow by all means. If you're watching me on YouTube and you've liked it, by all means, subscribe. If you like, hit that notification button so you know next time I'm going live. And if you found this little program interesting and insightful, by all means, give me one of those. It's nice to know that you liked it and you're finding it useful. But anyway, till then, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be treated as advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.